Ever wondered which real estate investment trusts can offer you a steady stream of dividend income? Stay tuned. Welcome to a world where your money is put to work in real estate, generating a steady stream of income. This is the world of real estate investment trusts, or REITs for short. These unique entities allow anyone to invest in portfolios of real estate assets, sharing in the wealth they generate. Now imagine if you could receive a piece of this wealth every single month. That's the beauty of monthly REITs. They distribute their income to investors on a monthly basis, providing a consistent and reliable source of income. Monthly REITs are like the gift that keeps on giving, month after month, year after year. It sounds pretty fantastic, right? Well, it's not just a dream. It's a reality for many investors around the globe. Now that we've set the stage, let's dive into our top 3 monthly REITs. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is the Realty Income Corporation, commonly known as O. Now, O isn't just a letter in the alphabet, but it's also a symbol of consistent and reliable income for investors. The annual yield percentage of O is a solid number that has proven to be a beacon of stability over the years. This stability is largely due to the corporation's commitment to its monthly dividend payment. Now that's right, you heard it, monthly. While most companies distribute dividends quarterly or annually, O has chosen to do it every single month. Imagine that. A steady income stream every 30 days. But what makes O even more appealing is its track record. For decades, this corporation has not only maintained but also increased its dividend payments. It's like a well-oiled machine consistently churning out profits for its investors. Now let's delve a bit deeper. O has an impressive portfolio of over 6,700 properties. That's not a typo, folks. Over 6,700. These properties are spread across 49 states and Puerto Rico, and they cover a diverse range of industries from retail to healthcare, providing a safety net against market fluctuations. And here's a surprising fact. O is one of the few S&P 500 companies that have managed to increase their dividends every year for the last 20 years. Talk about consistency. So, what does all this mean for you as an investor? It means that with O, you're not just investing in a company, but in a proven system of generating reliable income. It's like having a money tree that bears fruit every month, come rain or shine. So, with a reliable track record and a diverse portfolio, O is a great pick for monthly dividend income. It offers the promise of stability, consistency, and a steady flow of income that's hard to find elsewhere. But remember, always do your own research before making any investment decisions. After all, knowledge is power, and in the world of investing, it's also wealth. Moving on, our second pick is Stag Industrial Inc., a powerhouse in the industrial sector. Stag is a real estate investment trust that focuses on the acquisition, ownership, and operation of single-tenant industrial properties throughout the United States. The strength of Stag lies in its unique strategy of focusing on single-tenant industrial properties, a niche that it has been able to dominate and capitalize on. Now, let's talk numbers. Stag has an impressive annual yield percentage, which stands at approximately 4.5%. This percentage is a testament to the company's financial health and its ability to provide consistent returns to its investors. This high yield is an attractive feature for those seeking reliable dividend income. Stag's portfolio is diverse, with a broad range of tenants from various sectors such as e-commerce, manufacturing, and logistics. This diversity not only strengthens its portfolio but also mitigates the risk of any single tenant significantly impacting its revenue stream. The company's performance has been remarkably strong over the years. Despite economic downturns and market volatility, Stag has consistently maintained a high occupancy rate and has shown steady growth. This resilience is a testament to their strategic focus and effective management. Here's a surprising fact. Stag Industrial has managed to increase its dividend every single year since its initial public offering in 2011. That's right, year after year, Stag has provided its shareholders with an increase in their monthly dividends. This consistent growth is a clear indication of the company's dedication to its investors. Stag's single-tenant focus and strong performance make it a compelling choice for monthly dividends. By maintaining a high occupancy rate, providing a steady stream of income through its diversified portfolio and consistently growing its dividends. Stag Industrial Inc. has proven to be a reliable choice for those seeking monthly dividend income. So, if you're looking for a REIT with a robust strategy, a high yield, and a record of consistent growth, Stag Industrial Inc. should be on your radar. Last but not least, we have Agree Realty Corporation, or ADC. This particular real estate investment trust, or REIT, has an enticing annual yield percentage that should certainly catch your attention. Currently, ADC's annual yield percentage sits comfortably in the mid to high threes. This impressive yield is a testament to ADC's robust business model and its ability to generate consistent, reliable income for its investors. Now let's delve a bit deeper into what makes ADC tick. Predominantly, ADC focuses on retail properties, a sector that has shown resilience and adaptability despite the changing landscape of consumer behaviors. This focus has allowed ADC to amass an impressive portfolio of over 4,000 properties across 49 states. But what's truly remarkable about ADC is its tenant base. It boasts an array of high-quality tenants, including leading national and super-regional retailers. This diversified tenant base provides ADC with a steady stream of rental income and insulates it from the fluctuations of any single industry, making it a reliable choice for investors seeking monthly dividend income. It's also worth noting that ADC's nationwide reach is not just a testament to its size, but also to its strategic growth. ADC has demonstrated an ability to identify and capitalize on opportunities across the country, giving it a geographical diversification that few of its peers can match. And the icing on the cake, ADC has consistently grown its dividend for more than 2 decades, a feat that speaks volumes about its commitment to returning value to its shareholders. This consistent growth, coupled with its impressive portfolio and high-quality tenant base, makes ADC a compelling choice for anyone looking to generate reliable monthly dividend income. With its focus on retail and a nationwide presence, ADC is a promising pick for those seeking monthly dividend income. So there you have it, our top 3 picks for monthly REITs that can provide you with a reliable dividend income. Let's jog our memory a bit. First, we discussed Realty Income Corporation, aka O. This is a REIT that's been in the game for over 50 years, and it's known as the Monthly Dividend Company. It has an impressive annual yield percentage of approximately 4.5%. With a diversified portfolio of over 6,000 properties in 49 states, O offers a consistent and reliable dividend payout. Then we moved on to Stag Industrial Inc., or Stag, a newer player in the field. Stag focuses on single-tenant industrial properties, a niche that has seen significant growth in recent years, especially with the boom in e-commerce. It offers an annual yield of about 4.8%. Stag's growth strategy and commitment to monthly dividends make it an attractive choice for investors looking for reliable income. Lastly, we delved into Agree Realty Corporation, also known as ADC. ADC specializes in retail properties, boasting a diverse portfolio with over 700 properties across 46 states. It offers an annual yield of approximately 3.6%. ADC's focus on high-quality retail tenants and its solid track record make it a strong contender for your investment portfolio. In summary, Stag and ADC each offer unique selling points and, importantly, a commitment to monthly dividends. Whether it's the long-standing reliability of O, the growth potential of Stag, or the retail focus of ADC, these REITs bring something different to the table. They can provide you with a steady stream of income month after month, year after year. Remember, investing in REITs is a long-term game, but with these 3 picks, you're setting yourself up for steady monthly dividends. If you enjoyed this content, don't forget to subscribe, like, and share. Until next time, keep investing wisely. Before we wrap up, a quick reminder. It's crucial to remember that while we've shared some promising investment opportunities with Realty Income Corporation, Stag Industrial Inc., and Agree Realty Corporation, conducting your own research is absolutely fundamental. Each investor has unique financial goals and risk tolerance. Therefore, it's essential to consider these factors before making any investment decisions. Investing in REITs can offer a steady stream of dividend income, but it's vital to understand the market dynamics, the specifics of each REIT, and how they fit into your overall investment strategy. Stay tuned for more investment insights as we continue to explore various sectors, opportunities, and strategies. We aim to provide you with valuable information to help you make informed decisions. Knowledge is power, and in the world of investing, it could mean the difference between success and failure. Thank you for watching. Don't forget to subscribe, like, and share. See you in the next video.